Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. T.S. Harihar of HRBV Client Solutions, Senthil Manikandan of Newberry Capital, and independent investment advisor Vivek Mavani join us on the show. Thank you to all for joining me on the show. Today on Hot Money, we'll discuss stocks like Motherson Sumi, which is down almost 20% from the recent highs. We'll talk about the Tata Group stocks, which is a preferred bet. We'll talk about Yes Bank. Even Yes Bank is down close to 20% from the recent highs, and we'll discuss the metal space. So that's what we've been speaking about on Hot Money today. Let's start with the show for the first let's start with the show. The first stock that we want to talk about is Motherson Sumi. It managed to surge up on Friday because of the bonus that was approved, but nevertheless the counter is rather weak. It's down almost 20% from the recent highs. So what's plaguing Motherson Sumi and what's the way ahead? We'll ask our experts. So Vivek, I'll start with you. What's gone wrong for Motherson Sumi as of now? It's been on a continuous decline. What seems to be plaguing the stock?
Well, actually, what's plaguing is the valuations, which are which, to my opinion, are on the higher side. Beyond doubt, Motherson Sumi has created immense value for investors over the last 5, 10 years or even 15, 20 years, whatever time horizon you look at. But if we look at what it is now, even at current prices and valuations, well, for a company that will have long-term growth in the vicinity of 10-12% top line and bottom line, return on equity in the vicinity of 12 to 15%, the stock quotes at upwards of 30 times current year earnings, perhaps about 27, 28 times 1 year forward earnings, which on the valuations would seem slightly higher according to me. I would have preference, nothing wrong with Motherson Sumi per se in terms of business, nothing that I can think of for my limited understanding, okay. But I'll come back more on this.
Okay, so valuations certainly seem to be the issue that Vivek is speaking about. Senthil, what's your view? What's gone wrong for Motherson Sumi?
So we're also quite neutral to positive on the stock. Positive in the sense because if you look at the long-term 3 decades history of the company, so they have went for acquiring companies at a reasonable valuations and then successfully turning it around them. So now also their 5-year strategy has been putting up $18 billion on the top line front. Management focus is much more on the bottom line. So they want to achieve ROC of 40% across all the entities. So the management focus on the bottom line is quite impressive, and also their long-term focus and the long-term focus of building businesses across the geographies. So they have set a target of no customer or a client or a country or a component should form a 15% of their sales. Okay. So here the management is very much focused on the risk management side also. Like Vivek mentioned, we are quite neutral mostly because of valuations. So 30 times for an auto ancillary company looks expensive.
Okay, so again, valuation seems to be the concern that our second guest also has. And Hari, what's your view on Motherson Sumi?
No, we are also cautious, and I think I agree with both of them that valuation, I think, is a big concern. Even within the auto ancillary space, I don't think the growth potential seems to justify this kind of valuation. But we have a slightly larger concern on Motherson Sumi, and that has to do with that over-dependence on the diesel side of the ancillary business. And if you look at the customer profile of Motherson Sumi, it is largely skewed in favor of companies like Volkswagen. And Volkswagen is having a lot of, I think, reputational issues, product issues, and we really don't know what is going to be the total liability they're going to have from these levels. So I think honestly, if you ask me about auto ancillaries, I would believe that a stock like Bharat Forge, despite almost equivalent valuations, appears to be a better bet because of their exposure to the US truck market compared to Motherson Sumi. So we honestly wouldn't really prefer Motherson Sumi. We think Bharat Forge is a better bet in this space.
Okay, so that's the view that's coming in. I think cautious views coming in on Motherson Sumi at this point of time. We'll open it up for discussion. Vivek, you had more points to add on Motherson Sumi. If someone is looking at least for a long-term perspective, would you advise at these valuations, or still you believe that valuations are still expensive even if you're investing for the long term?
See, my issue, the second issue I have with Motherson Sumi, and that has actually nothing to do with the company, it's actually my personal issue. It's a company that has numerous subsidiaries, associate companies, sister companies across multiple geographies, across multiple product lines. And then when you look at the entire corporate structure, it is in terms of where is the sales and profits and cash flows coming from, where is it going? I mean, to somebody, a layman like me, or to an outsider, it becomes slightly difficult to understand as to where really are the growth drivers. So you can only take a top-down view on the company, you can only take a big picture view, and to me, that doesn't give me much comfort. I prefer, I mean, it is my personal preference. As I keep repeating, nothing wrong with the company. It is, with my limited understanding, my preference is for companies with simpler corporate structures, businesses which are simpler or easier to understand, so that one can understand the source of profits, where are the cash flows going, where the capital allocation, so on and so forth. And Motherson Sumi really, I mean, it baffles me as to how do I really look at this company. So, I mean, there are better auto ancillaries that I can look at, which also give enough growth potential, number one. And why do I need to restrict myself only to auto ancillaries? I mean, auto companies itself give me enough growth opportunities, say a Maruti or a Bajaj Auto or a Hero, which really don't have these kind of issues in terms of understanding the business profile itself. So it is for that reason, and not that valuations are ridiculously cheap. I mean, if it was available at 5 times or 8 times, I would probably take the trouble of understanding the corporate structure of Motherson Sumi. But 30 times, I don't think I need to really put in that effort.
Okay, anything else you like in the auto space that you said, auto Ank space?
Okay, auto ancillaries, then we have discussed Swaraj engines, JK tires. I could extend that to Apollo tires as well. So some of those stocks seem interesting to me. But to me, auto companies themselves are interesting both in terms of growth and valuations, and which is where I mentioned a Bajaj Auto or a Maruti itself, or a Hero MotoCorp.
Okay, what about you, Senthil? Anything else in the auto Ank space since you're cautious on Motherson Sumi?
So we like Arita seedings in the auto ancillary space, basically because in the auto ancillary space, every company is prone to pricing pressures. So here the margin pressure comes from the OEMs. But if you look at the Arita seedings, they are also facing these pressures. But currently the valuations are quite attractive in the range of 14-15 times trailing 12-month earnings. And the promoters are the TVS group. So having a good management quality for a company that is, even though their products won't be affected by the electric vehicle disruption.
Okay. Hari, just a few things. What triggers should investors now watch out for in Motherson Sumi in case, the view should turn positive?
I think a lot would depend on how this diesel story turns out, because that is where the entire future of Motherson seems to be contingent. But I think what I would be more keen to know is how are they going to adapt their model once the global auto industry shifts more towards the EV model. Because I think if you look at what we understand from the the various associations worldwide, we are going to see about 10 to 15% EV component by about 2023 and about 30-40% by 2033. And this is incremental sales, not the total sales. So I think that's a big chunk of the total auto sales that's going to go into EVs. Now, unless I think Motherson Sumi is able to prepare itself for the EV era, it will become like what happened at Nokia in 2007. A great company, wonderful sales, but suddenly the smartphone era comes and Nokia is nowhere. So I think that is something Motherson Sumi needs to be very cautious about.
Okay, so I think it's a consensus view that investors are still cautious on Motherson Sumi. Mainly, first and the biggest reason is the high valuations of almost 30 times. So that's the primary reason that other companies in the auto Ank space are being preferred compared to Motherson Sumi. The next stock that we want to talk about is Yes Bank, another bank which has fallen almost 20% from the recent highs. It continues to fall insignificantly. Since there's no much more clarity, even though Rana Kapoor has gotten the reappointment as the chief of the bank, there is not clarity in terms of the tenure. So that's something that's worrying the street. But after 20-25% drop, is Yes Bank valuation wise attractive? Is this something that you should add to your portfolio? We'll ask our experts. So Senthil, it's cheaper by 20%. You're trading at record highs. Now you're getting it 20% cheaper. Would you add Yes Bank?
So not at this level also. Majorly because if you look at the Yes Bank, they are in a transformation journey. So from your corporate focus to a remote retail and focused bank. So here, the Rana Kapoor has been at the helm since starting the bank, and he has been for there, and he has been steering the bank so far. So since the uncertainty in the management is there, so we have to look out for the stability at the top management level. But if you look at the traditional parameters, either be ROE or ROA, even in the asset quality fronts, they have done well quite, even in the during the stress periods of last 4-5 years. But I think for a bank and the financial institution, the trust and the management comes before the valuations.
Okay.
So we could much prefer other banks in the sector.
Okay, Hari, what's your view on Yes Bank? It's 20% cheaper. Is it a good proposition for someone to add it?
I would believe yes, because at least I would say that the downside risks are not too many at these levels, especially after the sharp correction. Because even though there have been some concerns on the asset quality, I think they have managed to keep their asset quality in check over the last, I think, few quarters. So that seems to be a positive. I've been hearing a lot about this management issue. A lot of people ask me what happens after Rana Kapoor. Other than Rana Kapoor, they don't see any leaders. But I think that is true probably with any bank. You take HDFC Bank, you take IndusInd Bank. I think everywhere there is a crisis of leadership. If the big man goes, what is next? So I think that is a question mark almost in all the banks. Probably other than ICICI and Axis, I think all the other banks have that big question mark in front of them. So I wouldn't read too much into that. But I think what we need to understand is, if you look at the retail plans of Yes Bank, I think they are looking at a massive 75% growth in the retail book in the next 2 years. Now, if they're even able to achieve, let's say, 70-80% of that, I think there's going to be a huge increase as far as their spreads, as far as their yields, and I think that is going to make a difference to the profit. So at these levels, I don't see any downside risk. So I would probably bet on Yes Bank at these prices.
Okay, so betting a yes and a no. So we've got contradictory views. And Vivek, what should one do on Yes Bank?
Well, as far as for me, as a Yes Bank is concerned, I clearly have preference for other private banks like a Kotak Bank, for example, or an IndusInd. Again, nothing really wrong with Yes Bank, although there have been doubts cast on the quality of their business, quality of their financials, whether you can believe those numbers. But Yes Bank, quarter after quarter, year after year for the last 15 years has proven those I would say skeptics wrong by delivering on growth, ROE and very low NPAs or very low bad loans. Now it does baffle one, including me, that a bank which is primarily a corporate bank with very limited retail portfolio in their total loan book, how do they manage NPAs of less than 1% while every other bank from Axis to ICICI, even HDFC's corporate loan book has NPAs more than 1%. So how does Yes Bank manage to do that? Well, I don't understand it, and probably a lot other people on the street don't understand it.
I'll get back to you on that, Vivek. But I think we're getting contradictory views on Yes Bank. We'll open it up for discussion. So, Vivek, so your concern is basically in terms of how they're managing their NPA. So, is that a question mark? Because in the past also RBI has raised this issue and they've brought this up. So, is that a big concern that is there on Yes Bank?
Well, in terms of, as I mentioned, you and I as market participants, we can raise concerns, but the management has proved all of us wrong consistently, quarter after quarter, year after year, and still reports fantastic set of numbers. I'm still not able to understand that. So hence, although the valuations at maybe about 2.5 times price to book and a return on equity of about 19-20% on a sustainable basis, which seems cheap, I would still prefer a Kotak Bank or an IndusInd Bank with even a slightly higher valuations, but with greater certainty and surety in terms of the numbers.
Okay, Hari, how much, you spoke about it, but how much difference will this hanging sword have on Yes Bank in terms of whether Rana Kapoor will be there for 1 year or 3 years? How important is it? Can Yes Bank survive without Rana Kapoor? That's the question.
See, at this point of time, I don't think there appears to be any substitute as far as because to a large extent, I think the DNA of Yes Bank seems to be molded by the personality of Rana Kapoor. So to that extent, I don't see any alternatives. But as I said, that is a problem with probably most of the banks. You take a Kotak Bank, you take a HDFC Bank, you take an IndusInd Bank. I think to a large extent, the CEO or the chairman molds the character of that company. So I think that is true of most of the banks. I'm sure they have a succession plan in place, and probably I think once he decides to step down, there will be number 2, number 3 coming in. So I don't think that should be much of an issue. And I agree with Vivek on the NPA issue, but let's also admit that at the end of the day in India, the RBI is doing a good job of, I think, regulating the bank. So I think it's not like a Satyam, it suddenly gets up one day morning and says that I said I had 4,000 crores, but I don't have anything. I don't think that kind of an issue you could have in an Indian bank. Hopefully, I think NPS probably they're saying 1%, it could be 1.5%, but I don't think the spillage should be too much on that front.
Okay, and Senthil, you don't prefer Yes Bank? Anything else you like in the corporate in the private sector banks?
So in the private sector bank, we like City Union Bank. So if you look at the bank has been much more focused on the MSME space and the trader space. So they have stick to these categories for the long term. So they are able to post a steady, stable growth of 15% in the loan growth. Also, even on the profit level, they have maintained the asset quality level stable in the last 3-4 years. Considering the valuation, they are trading at around 2.5 times on year forward book. But on the ROE terms or ROE terms, they looks quite comfortable on the valuations, and much more on the management's quality here, because much of the small banks went in for a corporate lending and they got burned in their books. But here the banks steadied their books and focused on their core categories.
Okay, so that's the view that's coming in on Yes Bank. We'll move on to the next stock, and a lot of Tata Group stocks are in focus. Like today, Tata Global announced a big restructuring. The counter managed to move up. TCS has been trading near record highs. So we're asking which Tata Group stock, apart from TCS, which obviously is trading at record highs and doing extremely well, which other Tata Group stock do our participants like for an investment purpose? So I'll start with you, Hari. Among all the Tata Group companies, which stock would you prefer?
See, whenever I recommend Tata Motors, the normal reference seems to be that, but the stock has not gone anywhere. But that's true. But no, I still think that at these prices, Tata Motors appears to have a lot of value. I understand that JLR is facing problems with the China front, but let us look at it from a slightly larger perspective. Look at Tata Motors in the last 1 or 2 months. I think they've done extremely well in the domestic market. Number 2, look at which Indian company is actually prepared for the shift to EVs in the next 5 years. It's probably Mahindra & Mahindra, and to an extent Tata Motors. I agree, costs are too high. I think the price at which a Tata Motors is selling EVs to government, I don't think the general public will be able to afford it. But I think that aside, as technologies improve, as the battery price per kilowatt hour reduces, I would believe that these would be the companies that would be best positioned to, take advantage of the trend. So from a 3 to 4 year perspective, I would believe that Tata Motors looks to be extremely salivating at these prices.
Okay. Apart from, but Tata Motors not giving returns. That's the big question. They continue to disappoint on the Jaguar front. They're not able to get it. Even in the domestic markets, the turnaround hasn't been very distinct. When do you see this turnaround actually happening for Tata?
See, let's understand that there is a restructuring process that is on for the last 1 year. And if you look at the way Mr. Chandrasekhar has performed once he took over Tata Sons, I think TCS has done very well in the last 1 year after lagging for almost 2 years. Tata Steel has done very well after correcting sharply. I think Tata Motors is probably the only stock that has not done a great shakes in the last 1 year. And I would believe that this big shift that they're working on EVs, on the EV front, and the restructuring of the domestic business. See, the JLR business is going to continue to be a China-centric business. So till the time China does not pick up, your JLR will see a fall in numbers. I don't think there's much of a choice. But I think the restructuring of the domestic business and the EV shift, that is going to be the big story as far as Tata Motors is concerned.
Okay, Tata Motors, any risks to Tata Motors if someone is looking to accumulate?
Yeah, I think short-term risk is definitely there. For example, next 2 or 3 months, I think if the China sales and of JLR lag, you could see another 10% downside in the price. So that's the risk you run. But long-term, I don't see too many risks on the stock. Okay,
so Tata Motors is a stock that Hari likes at this point of time. Senthil, which stock? I believe Titan, right?
Yes. So if you look at the consumption space, the market leaders own around 40-50%, the number one market leader. But if you look at the jewelry space, the market leader has been the Titan. But if you look at the market share, has been in single digits. Even put together, the organized market is around 20-25% of the total market. So there is a huge leeway for growth, even for a size of the company such as Titan.
Okay.
And the management's now the focus, I think they have given a target, they have given a guidance of around 25% top line growth. I think it's quite achievable from this level also. But on the other hand, say the valuations are not quite, I could say not quite at this level to invest. But one can keep the stock at the watch list and invest on the declines.
Okay, what are the key triggers if someone is looking at, let's say the counter corrects, what are the key triggers that you're looking at for Titan?
First one could be the margin improvement in the jewelry segment. Now they are focusing much more on the wedding segment. Even the last quarter, I think they have launched 2 new designs, one in the South India focused and another on the North India side. So much more focused on the studded jewelry segment and the light jewelry segment. So I think they are also keeping up with the trends. So that is majorly important. And further, I think the move towards organized with more complaints coming in the jewelry segment, I think they could be able to do much more in the jewelry segment going forward.
Okay, so that's the view. And Vivek, I believe you also like Titan from the Tata Group space?
Yeah, absolutely. So in terms of over and above what Senthil has mentioned, I mean, basically the structural growth drivers for growth over the next 5, 10, 15 years in Titan are very much in place and firing, in the sense In the jewelry business, better product mix, shift from unorganized to organized, branded, GST, all of them are triggers for the jewelry business. Better product mix is more of diamond jewelry, more of wedding jewelry, and a better the exchange gold exchange scheme where they were which was announced earlier this year would be the drivers for the jewelry business, the Tanishq business. What I'm also quite bullish about, and so far they probably the track record isn't much to talk about, but Titan basically gets into those new businesses which have very, very fragmented markets. Number one, a very large unorganized, unbranded market, and over a period of time the superior product quality and Tata name in terms of as a guarantee, as an assurance, works in their favor. So we look at the eyewear business, which includes sunglasses, spectacles, frames and lenses, all of it. I mean, you have a very large addressable market, a very fragmented market which is addressed either by imports or unorganized, unbranded sector domestically at the lower end. And Titan has placed itself, I mean the Titan Eye, the business, which currently is about couple of 100 crores, I think it's about close to 500 crores as of last financial year, which can easily be probably as large as the jewelry business as is it today, which could be about 10-12,000 crores, significantly larger than the traditional watch business, and significantly more profitable, because how profitable that business is, talk to any optician and within the circle and you would know as to how profitable the spectacle business and sunglasses business can be. Titan is still in the, is an investment phase, but over a period of time when that fits in, you have a very strong third growth driver in Titan besides the jewelry, watches and the eyewear being the third one. Valuations, yes, at about 40-42 times forward earnings may seem rich, but this is a company that on a sustainable basis can grow at about 20% and generate 25% return on equity, return on capital, a debt-free company. So I think that kind of valuations may be justified. Maybe if not today at 850 levels, but on decline, certainly it's a long-term portfolio holding stock.
Okay, any risks to Titan?
Well, the risks could be more of the short-term derating or any setbacks the market may perceive on slower growth. I mean, let's also recollect just last few months. Earlier, they guided for 25% growth. Post first quarter results, they lowered it to 20%. So, and which also coincided with the stock correcting almost 15% in the last couple of months. So those kind of short-term setbacks where quarterly growth numbers don't live up and hence they have to reduce their annual growth targets or growth guidances. I mean, but besides that, long-term, I don't really see a risk in this.
Okay, so Titan as well as Tata Motors are the two counters that have come out on the discussion on Tata Group stocks. And the last one we want to speak about is the metal pack. Metals have been doing well of late. On Friday, they did manage to rally in trade. We're asking our guest with a view on the metal space at this point of time. So, Hari, I'll start with you. Your top pick in the metal space?
We like JSW Steel. I think in terms of financial parameters, in terms of its expansion plans, I think it's now among the top in terms of capacity along with Tata Steel. I think about 27 million tons or so. It's among the top in terms of capacity. Steel demand is going to go threefold by 2030. So that's, I think, going to be a big positive. But perhaps I think the biggest advantage that JSW has is that it doesn't have a big elephant like Tata Steel has in the form of Bhushan. I think the price that Tata Steel has paid for Bhushan at 35,000 crores appears to be quite steep. Considering that it has a lot of toxic assets in its book, I think that should be a big drag as far as Tata Steel's ability to generate ROA is concerned. Relatively, I think JSW Steel to me looks to be a much better bet. So we like JSW Steel at these levels.
Okay, JSW Steel. Senthil, do you track the metal space?
No, we don't track the space.
Okay, and Vivek, I believe you also don't track, but you have a view on the overall space as such?
See, basically, like I mentioned earlier, a couple of weeks ago on this very program, that I'm not really bullish on commodities, especially the metal commodities, given that dollar is likely to remain very strong, and a strong dollar is really not conducive for high metal prices or high commodity prices in general. So that applies even to non-metal commodities. So it is for this reason. I mean, and given my, I would say, limited understanding about the global commodity cycles, so I would let the sector pass. Even if there are opportunities, there are better opportunities to chase or take care of outside of the metal space, according to me.
Okay, so that's the view that's coming in on the metal space. JSW Steel seems to be the stock that we've spoken about. The other two guests don't have a firm view on the metal space. But with that, it's a wrap on today's Hot Money. Vivek, thanks so much for coming in. Hari and Senthil, thank you so much for coming in today for the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.